Trending markets can help guide strategies, and relative to the benchmark MSCI, Greece has been a big outperformer on indices. On the FX markets, we'll be looking at euro-dollar. Our guest today is Trevor Neil, one of the co-founders of Relative Rotation Graphs, a tool to measure a security's relative strength or otherwise around a benchmark. Trevor, welcome. Now, we've spoken to you about RRGs before, but just quickly recap exactly how they work.
Well, relative rotation graphs are a unique way of displaying complex data like a number of stock indices or currencies against a benchmark as a dynamic scattergram. So the scattergram has got two axes. Along the x-axis, the bottom here, we've got the relative strength of the security versus the benchmark. Things which are furthest to the right, so in the right two quadrants, are outperforming the benchmark. Things that are to the left, as you can see with the lower readings there, and labelled lagging and improving, these are securities which are underperforming on a relative basis, the benchmark, which in this case is US dollars. But then we have the other axis, the y-axis. Here we've got 100, and then above, the horizontal line now, above 100, is is improving relative momentum. And then below 100 is with less good positive momentum. So what we end up with is four quadrants. Things which are in the top right-hand quadrant, which is labelled leading there, have got both outperformance, so they're on the right of 100, and also with positive momentum. So these are things which are good and getting better. On the bottom right-hand quadrant, which we've labelled weakening, these are securities which are outperforming because they're a right of 100, but are losing positive momentum. So these are things which are high on the list, but actually losing their power there. The bottom left is the worst place, which is things which are underperforming but not with good momentum. And then perhaps for many people the most interesting place is the top left-hand quadrant, which is the improving quadrant, things which are currently underperforming, perhaps neglected, because they're not seemingly doing well, but now are coming quickly up on a relative basis. And we can see when we display them with the tails that they've got. So this is a day ago, a day, and actually 7 days back. Those are the length of those tails. The long tails, for example, you can see on the ruble. The ruble has come around very, very fast from lagging through improving, and I think I know where it's headed next, which is into leading quadrant. So as chartists, we can now see graphically the performance of securities.
Okay, well, as I said at the top, we're going to be looking at the euro today, and the euro is a particularly short tail, but in fact, unlike the others which are going clockwise around the centre, the crosshairs, which I know as the dollar, it's poking back up in a reverse order, but it is going into what is perceived as a good quadrant.
Yes. So if you think about it, the things which are heading northeast are doing well because they are increasing both in ratio, in performance, and also in the momentum of the performance. So we've got the ruble, yes, we've got Norwegian crown, but what we've seen is you can see a little squiggle at the beginning of the euro. The euro has turned round and it's now leading its way across. Now, the reason I'm most interested in this, first of all, it's big, but secondly, because it's furthest to the right. This means it's got the most overperformance. The ruble hasn't yet, and the Norwegian crown hasn't yet either. But over to the right there, so pointing the right direction, over on the right, so having the relative overperformance, is the euro. So I like the euro, and I think the euro is going to continue to lead.
So how do you trade this?
Yes, well, let's now look at the euro itself, the chart of the euro. So this is not in any relative basis, this is versus the US dollar. Now, the euro on this monthly chart, you will see, has been ranging since the latter half of last year. It's in a fairly established range, but well marked range. We've got a clear resistance level, and then we've got very big resistance back on the left-hand side, going back into 2012, that zone back there, which is starting at 122. But the euro is looking bullish within the consolidation itself. If we go down now to a daily chart, so that was a monthly chart. If we go down now and look at it on a daily basis, we will see that over the last couple of months, it's moved ahead very, very strongly indeed inside the range itself. It's powering up and moving ahead very nicely. It's you see the RSI down at the bottom on the chart, relative strength index on the bottom of the chart. It's moving up with the action of the price, which is confirming the action of price. There is a small bearish divergence currently there where we've got lower highs in the RSI and higher highs in the price, which indicates the opportunity that we might have a short-term pause. Now, a short-term pause might be just like the one that we just had back in the beginning of May, and would be a buy opportunity in my opinion, because I think the long-term trend is up, the intermediate-term trend is up, and also the short-term trend is up. But we're pausing in that short-term trend, and I think it will present us with a buy opportunity. I think it will stabilise above 110 and then move on again and go higher, and eventually break out and head towards that big resistance at 122.
At 122. If you go long on this sort of trade at these sort of levels, where do you put your stop? How do you then start to calculate where to stop?
Well, thinking ahead, if we do have the drift, which is indicated by the divergence in the RSI, and hasn't yet happened, hasn't yet evolved, we've just kind of stopped at the moment. If we do have some drifting, and if I could go back to the previous dip that we had, Jeremy, yes, exactly pointing there. So if the pattern turns out to be like that, then the candle at the low, as you see, was a doji and a doji star or long-legged doji, so an indecisive candle. So that was an indication that we were probably running out of steam on the downside, which we do expect. So look for something like that again. And then the candle after it, nice white-bodied candle, powering move, finishing near the high. This is an indication of the trend reasserting itself, and that would be your buy point, a candle like that. Then you've got a very obvious place for the stop, which is below the low of the doji candle. So then you've got a low risk trade, which should indicate that we should move again in a leg which is as long as the previous leg, which is from 110, from the low of the doji up to the high so far. We can just mark up to there. We should make another move like that of that length.
Of that sort of magnitude. Right. Okay. That gives an indication. And of course, on these charts, it defaults to green. Yes. White. White is a positive day's move, isn't it?
There are only two colours of candles: black and white.
Black and white, indeed. These default to red and green. Hey ho. Listen. Let me move on to take a look at the other point that I mentioned at the top of the interview, because I think it's worth mentioning about your research that shows that Greece is an outperformer at the moment. Unusually, in my mind, to think that the fundamentals, I know we're not talking about fundamentals, but let's take a look at your relative rotation graph for the indices, if we can, and we'll take a look at what's going on.
When we look at this relative strength graph, relative rotation graph, we have in the middle here the benchmark, which is the MSCI World Index, and then we have major indices. We've taken a lot of these off to make it clear, but what I wanted to show, and we've highlighted, is that over on the right-hand side, particularly the top right-hand side, which is the leading quadrant, it's populated by European equities. And over on the left-hand side, we've got the USA and Australia and Japan and Asian equities down there. So Europe is in the lead at the moment. There was a time when it was very difficult to get outperformance of the S&P, but now Europe is the outperformer. We've got lots of individual European markets. Now, over on the right-hand side, furthest on the right, is Spain. So the strongest market relative to the world is Spain at the moment, and it's sort of curving round a little bit, not pointing northeast as we would hope. Austria is pointing in the right direction, but right up at the top there is Greece. Now, being right up at the top there and pointing in that northeasterly direction means it's got high momentum of relative strength. So this means it's likely to continue to outperform. So yes, I continue to like this very much indeed. We had a narrowing pattern, a symmetrical triangle pattern, which has dominated the Greek index and ETFs for months and months and months now. But in this now we had the powerful breakout of it. We haven't yet reached the objective of the count from the triangle itself. We broke through resistance very easily at 900 and it cleared that without any problem. That's kind of surprising that it managed to do that so well. It's powering ahead now, and now it's easing back a bit, but I think that this easing back is like the euro itself is presenting itself as an opportunity to buy a dip in a strongly rising market. I think given the picture that we see in the relative rotation graphs, I think we can see this reasserting itself on an absolute basis, and this here is the global Greece 20 ETF. So this is a way you can participate directly in Greece.
How far up, and how would you measure the distance you're expecting this to rise?
Well, we've got various old resistance levels above us. If we could just go back to bring those into the graph, thanks there. So we as we go up, we will hit resistance there at 1095, and then there's various resistance. Of course, we came down and down and down a long way, but none of these are really powerful resistances. We've got the consolidation of 2015, which is quite powerful, but I think that we've got a major bottom in force here now. If we break the high of October 2015 there, we will really have totally ended the bear market. We've already broken the pattern of lower highs by breaking the 900 high. So lower high, lower high, lower high. Now we've broken that one. But if we break through this one, well, it's no longer a bear market at all. It's a bull market, in fact.
Okay, so targets up here. You're looking for the first break of that point there, about the 1098.
Yes.
And the sensible place to put stops, presumably something around about here, presumably.
Yes, or below there. Yes, slightly below 900. 900, of course, is a round number. It's a magnet for the market, and so is 1,000 as well for this ETF. So 900 should provide support, and if it finds support there, has this good-looking candle, the type of thing that we're looking for, big white-bodied candle, that would be the buy, and then you could place a stop just below that low.
Interesting. Okay, Trevor, thanks indeed for joining us. Trevor Neil is from Relative Rotation Graphs, taking us through how to trade some of the trends in the markets.